I think it would be very easy to be critical of the regulator because they have a virtually impossible job. They can't win, if you like, because on one side they have to protect the interests of consumers. On the other side, they're seen as being the hindrance to innovation. But the moment something goes wrong, guess what? Everybody wants to blame the FCA. So no, I think the regulators are not a hindrance. I think that it's very intelligent what they've done in introducing the Innovate group to talk to companies like ffrees, to work with companies who are on the path eventually to their own regulation, to make sure that they can combine innovation with good protection of consumers. In terms of the growth potential of the entire banking sector, we're at ffrees much more focused obviously on the current account sector. The current account is the core product that every person in the UK has a right to have and should have, and many already do. So we see huge potential in opening up the current account product to be something that customers feel comfortable with, they feel engaged with, they feel that it's helping them, it has their best interests at heart, and they can access it through all the Internet of Things access points they want to access from. So effectively, we see massive growth potential for digital current account players, and as ffrees is the leading proponent in that sector, we think there's a huge opportunity. I'm continuously asked how ffrees has grown so quickly in putting on 40,000 customers in just over 12 months. In fact, it would have been more if it weren't for the rigours of KYC. It's done purely through social interaction with our customers, recommendation from our customers, and through using the existing digital channels that are out there and knowing how to manipulate them. Manipulate sounds Machiavellian, but it's not. It's they are channels and they're there to be used. So we're heavy users of Facebook, we're heavy users of Google AdWords, we're heavy users of, and buying the right AdWords by the way, the ones the banks don't think about. We're heavy users of comparison sites where ffrees appears as the leading online account. So there are lots and lots of ways to gain customers and not have to pay the exorbitant prices the banks are paying for their customers. ffrees has been very lucky to have been heavily invested by a mix of institutional investors and actually social impact funds that are supportive of our financial inclusion efforts. But with 60% of our customers, of all people in the country, not having any savings, ffrees is obviously opening up the opportunity for people who haven't got current accounts maybe in the first place to get them, and for other people who have got current accounts to move from a debt culture to a savings culture. And that has been a huge hit in the financial inclusion game, and long may it continue.